theme in India is here to stay. Whether it will be next 10, 15, 20 years, I believe manufacturing in India is on the rise. And there are confluence of factors driving that. Number one is China is facing a slowdown. And China is trying to move away from being, the manufacturing or the factory of the world to becoming a more inwardly focused, more domestic consumption focused economy. Now, that is a transition that China needs to make. So there is a need for them to move away from certain sectors. Second, world has realized that it is too dependent on China in some of the sectors and some of the strategic sectors as well. So they need to reduce their dependence. Nobody for a moment is suggesting that China is going to be replaced. But if China is 40% market share in a particular commodity, that might come down to 35% over a period of time. Or if it is 90-95%, as in the case of solar renewables, that will also come down. They cannot remain so dominant in a particular sector because the importance of that has now been impressed upon the major economies in the world due to what happened during COVID times. And third is, of course, India needs to, replace its agriculture as the main, agri and rural economy as the main source of employment for people and move them towards, urbanization, infrastructure, related employment and manufacturing related employment. So those are the three pillars on which the manufacturing theme is going to survive. Now, within manufacturing, there are many sectors and subsectors, and they will keep, coming into the limelight and going out of the limelight. For example, chemical was actually the first sector to take off way back in 2014, and it had a great run until 21. And then what we realized is that, China was not really vacating that space, but it was only moving its production away from residential localities to faraway localities. So when China came back into the market, there was a lot of dumping, which led to this manufacturing theme in China taking a big pause. So last 3 years, it's been on a pause, or in fact, you can even say taking a step back. Even though India might be gaining market share, but the profits have eroded for a lot of these chemical companies. The mantle moved to two sectors post 21. One was the electronic manufacturing sector, which is essentially the China plus one theme. And the second was the defense, but defense was more an import substitution story. So in the electronic manufacturing, I think we have started off on a great note where one particular subsector, which is the mobile phones assembly, is where we have done well to take away a lot of the market share. And that has led to a lot of, replacement of imports with, in fact, now we are net exporters in the mobile phone. Of course, we have to still move up the value chain. We have to add a lot more value rather than just do assembly work. But that is where we are in that stage, in that story, where the component manufacturing is now getting relocated to India. It is not only about the assembly. And I think this is where the opportunity lies in the electronic manufacturing space, where some of these component manufacturers are going to see a good tailwind for the next 5-10 years. And the story will keep moving on from components eventually to maybe full assembly or the branded guys as well. But that story is for a future date. So I remain positive on the space, but there are certain companies in electronic manufacturing which are now quoting at valuations which are very difficult to justify, and they might be capturing in next 3-4 years kind of gains. So I would be a little skeptical about placing new bets in some of these old stories. So that's my take on the electronic manufacturing space.
Okay, point taken as far as that is concerned. But Ravi, hi, first wishing you, the best of 2025. But just wanted to get a better sense from you on real estate, because that is where there is a bit of a disconnect. Because if you go by anecdotes and if you go by ground reports, it does seem like that there is enough inventory. Perhaps there is increased discounting and those, good offers that the developers kind of give. But at the same time, the story and the numbers, point out to something else. And you are also quite bullish on real estate, even for 2025.
Yeah, thank you. Happy New Year to you as well. Real estate has been a very partially bullish story since the last 3-4 years. And I don't think any other sector, epitomizes the K-shaped recovery better than real estate sector. All the recovery has primarily been on the luxury end of the market. And the reason for that is also actually very understandable, because the growth in the market has been driven more by asset inflation rather than through income growth. And basically, if you have been an owner of gold, real estate, when I say real estate, land, or if you have been an equity investor, then your wealth has grown. And that is what is feeding into the luxury real estate cycle. But if you have been, a wage earner, income earner with not too much exposure to any of these asset classes, or you have not been an investor, then you have you have failed to keep pace with the inflation. And that is what is hurting the demand at the bottom of the pyramid. So there is a strong need to broad base the real estate cycle that we have seen till now. If we really want, broad based benefits of the multiplier effect of real estate cycle, then we need to broad base it. And what we saw in the last budget, I think, is a reflection, and also that government understands it. So when we saw that actually the government ended with fewer seats than one would have expected, the natural bent of mind was that, okay, now we are going to see a lot more fiscal indiscipline or money being spent rather than towing the fiscal discipline line. What they said is instead, like, they are going to build 3 crore affordable homes. Now that is still continues to basically feed into the supply side reforms and the economy, that economic tool that government has been using to revive, which is continue building houses, continue to revive the demand in the real estate cycle. Now, I think one big factor that has been missing is that the liquidity has been tight from the RBI side, and also interest rates have remained elevated, which has kind of further aggravated the situation in the real estate cycle, especially at the mid and the bottom level of the pyramid. I think both those factors are about to change from the RBI side, and I hope from the government side as well. Though I'm not so sure if it will be the central government, but already we are seeing signs of some amount of fiscal, well, indiscipline would be a strong word, but money being spent by the state governments. So whichever government, whichever state is going into election is actually leading to some amount of spending in the economy. And I think that is giving a lot of support to the rural and the consumption cycle. So I am hopeful that this cycle will revive, and the real estate cycle will get broad based over the next 2-3 years, though we cannot be sure of what exactly will happen in the next 3-4 months.
Ravi, in continuation to that, do you think the consumption theme is here to stay, and would it continue to have that premium bent to it?
So I think a lot of things have changed in the consumption cycle. I think earlier we used to associate consumption with FMCG or the consumer staples. I think a lot of the categories over there are penetrated beyond 40-50%, and all the growth over there is basically distribution growth. We used to say there are 6 lakh retail outlets, and X particular company has only yet penetrated into 1 lakh outlets, and there is still so much scope for those products to grow. But now today, I think that penetration levels have reached kind of a saturation level, and also I think the nature of consumption is changing. People have probably started, this quick commerce is probably taking away a lot of that growth towards itself. So that is impacting the growth of the traditional distribution outlets. So that, I think, is what is ailing the consumption. However, there are certain pockets within consumption that you can see where there are signs of revival, and one should be betting. So, for example, we just made a point that the real estate cycle needs to broad base and has not done well. But if this was to happen, that real estate cycle broad bases, I think the building materials segment, which is dependent on this real estate cycle, will start seeing an upcycle as well. So, and that is kind of a quasi-consumption place. Once you have done bought a house, and then you are going to spend a lot on things that go inside a house essentially. So consumption is in a phase of transition. I won't say we are on the verge of a revival, but I think further deterioration should stop somewhere around here. And maybe stocks from a longer term perspective have started looking more reasonable than they have been in the recent past.